Recording in progress.
It's Friday. We made it. Yay! All right, so as we usually do, we want to start out with what happened in the overnight hours and kind of consider how that will affect today's trading. These morning briefings, to remind anybody who might not have heard me say it before, these are my solution for how to teach people to prepare for a trading day. I tried to make videos on it. There are so many things that could make us deviate from a set plan because we kind of want to go where the information leads us. And yet at the same time, we want some kind of outline that will allow us to find a consistent way to approach the market every day. As a part of that process, the whole goal is, if you think about, say, a big funnel, and that there's all these different markets, different names and companies and ETFs and symbols that we could look at, right? There's just this, well, say for an example, 600 different markets that have weekly options, just starting there. That we want to try to funnel that down to 2 or 3 trade ideas. Cut out the noise and have a very solid understanding or a solid expectation of what's going to happen during our trading day. And it's not to say that we have to nail it from the beginning, right? That we think, well, it's going to go up today, and if it doesn't go up, we were wrong and we screwed it all up. We want to start with a basic premise, lay out the plan for an upward move, lay out the plan for a downward move. Have a what if scenario. What if we do break out? What if we do continue to fall lower? What's the trades going to be? Where would our likely opportunities come from? Why would it likely fall lower or go up? Right? So that's kind of the approach. The whole idea, though, is to teach you how to do this, to kind of present ideas and opportunities and ways that you can put one together for yourself, because that is the goal, to get you to a point where you're doing your own briefing, whatever you may call it. When I'm not recording these, I can do them on my own in, say, about 15 minutes, right? And mine continues to grow as I add, currency pairs, and, the more I trade, the more stuff that ends up being a tradable thing for me, the more I have to analyze different markets. And yet, on the other side of that, the more I understand of all these various parts and pieces, like currency markets, the more I understand the moves that I see within our own regular markets. So I tend to use Finance Juice. This is a really great free resource. It does help if you have an account here, but you don't have to have one. It's free. So opening an account won't cost you anything. You just go in, sign up for an account. The reason you want that free account, which you don't need, you don't have to have it, but if you do have it, you can use the filter up here. So if you click on My News, you can turn off a lot of the news that shows up. This is a news aggregate website, and it's going to collect news from all over the place. Well, not all news is valuable or useful, right? Say Fox Business. I don't really care whatever Fox Business is talking about. Same with CSNBC. I don't really care what they're talking about either. So you can choose what news you get, right? And of course, that can cut down on how much time you waste, say, scrolling through all the junk looking for the nugget that happens to be the gold you're looking for, right? So that's the value of having an account here. And since it's free, I kind of got to ask, like, why wouldn't you have an account here? It's free. This is where I find who's going to be speaking today. Keep in mind that people can just show up and start speaking somewhere. The plunge protection team, for an example, can just pop up on national television and start talking. They would not have shown up in this category first because this is for known events. And if they just randomly pop up, well, then they're not going to be in here. But you will start to notice they'll start pointing out that there's somebody talking. Like they'll name the ECB individual and they'll say that this ECB person is talking, like Philip here. Chris Philip was speaking, and there was multiple posts showing what it was that he was talking about. So that can kind of get your attention, right? Yesterday, Yellen was speaking, and as she was speaking, it started popping up in here. They also do this market wrap. They do one for 3 major markets: ours, Asia's, and Europe's. And even though Europe technically isn't closed yet because it's 12:40 in the afternoon, they give us a wrap anyways. And this is sometimes useful, sometimes not. If there's a leading sector or a really beat down sector in the European session, it will very often bleed into our own session. So, generically say if real estate is doing really good, then, that's liable to carry over into our market or, something like that. We're also looking for global changing events. And the example that I usually give is when that ship got stuck in the canal. Oh, what a global event, right? That lasted for a while, and everybody was focused on it. So most of the time, you're not going to get a ship stuck in the canal kind of event. Thankfully, right? We wouldn't want those kind of daily headaches, but we certainly want to look for them. If there's nothing there, there's nothing there. It's a pretty light day today. Thinking of, the list of economic events on the schedule, and keep in mind that there are always a lot of events, and they don't necessarily populate in one spot. So you can check here. You can go to the EconoDay website. FX Street is another one that's free and also is a great resource. This is another one that it does help to have an account, but don't give these guys your real account, your real email address. Give them a spoofed email, or, like my email provider has this tool where I can just create a junk email address. And that way I can sign into places like this, because these guys will bomb your email with so much junk. But it's a great resource, especially if you go to the economic calendar. Very often they'll have like a little description of what they think is going on in the dollar, which is cool. Anything that you can get that talks about the dollar is a good thing. This one actually has impact, anticipated impact parameters. So if they think it's something that could greatly affect the market, they'll darken it into that orange. The lighter the color, the less they believe it's impactful. So this one's really good, and you can set it to your own time frame, which is absolutely something you would want to do. The EconoDay calendar, this is actually what Thinkorswim uses. So this website here, I bought one of their hardback calendars. They'll ship it to your house, and where. This here is exactly what Thinkorswim uses. So if you see US PMI Composite Flash and you want to know more about it, you click on it and you get this description page. All of this language is exactly word for word what you will see inside the Thinkorswim. So if we go to calendar and we look at PMI Composite Flash and we click on it, we get this pop-up here with the description and why we should care and blah blah blah. All of this word for word is pulled from that EconoDay website. because Thinkorswim reaches out to get that, right? One thing I don't mention very often, and I want to start mentioning it more, is Trade Flash. So let's get rid of this one. Switch gadget. Trade Flash. Now, Trade Flash is provided by Hammerstone Markets. If you went to the Hammerstone website and you were to sign up for their full service, it's hundreds of dollars a month. Crazy expensive. Now, obviously, you're not going to get full Hammerstone access from this free widget, but any kind of access for free is better than none. It is a collection of material from unusual options alert to breaking news and anything in between. It is an absolute amazing tool, and if you don't put a name in it, it will just react whenever one of their commentators publish something, and that's, from my understanding, what is going on. One, it does reach out to Hammerstone, but two, there is a group of people and they post things that come into this, right? So it's actually individuals that see something happening and put it in here. So you can put, a particular name into it, and if there's a post today that matches that name, it'll show up. If not, then it won't. It'll be blank, like what you see right there. I generally don't put anything into it. I just leave it blank, and that way anything that they deem market relevant will show up, whether it's XLE, ARC, the VIX, whatever. It's going to be there. That's a valuable resource through the day, by the way. When I was at the Bullish Bears, people would say, wow, this is great information. Where did you get this? That was very timely. How did you find that? From places like Finance Juice, the Trade Flash. Those are really great free ways to get very, very timely information without having to, spend a ton of money on it. So, yeah. One more thing I will mention about the economic events on the day. There's a lot of them that you don't see. Grain shipments, currency base settings, interest rate settings. There's so many that you don't see unless it is your niche that you happen to go looking for. And the government being the government, a lot of it is going to land on the hour or on the half hour, which is why it's really important through the day to watch the clock. Watch the clock. I mean, I can't stress it enough. The clock is one of the best indicators you could ever use when it comes to trading. And it's free. It's the clock. Just what time is it? Is a half hour candle closing? Is a 1 hour candle closing? So here on the EconoDay website, you have an ag calendar. Believe it or not, there is ag data going out all day long. And sure, probably most of the time, it's not going to be very impactful. That's not to say that it's never impactful. And the same thing with FX calendar, Forex, right? Currency and currency pairs and the currency calendar. That is another one where there is economic events all the time. So these ones, make sure you look in multiple places. You may not see a particular economic event in one location, and then you do find it at another location. And you can use the bots too, right? The bots will allow you to call up economic events on the day, for an example. So econ/calendar. I love this change that the Discord did for the bots, all bots everywhere, where you get this kind of menu to choose from. Ah, I love it. So pretty cool. Another calendar worth keeping your eye on is the president's schedule. Sometimes his schedule is useful, and I mean, other times maybe not so much. During COVID, man, it was a daily thing. You always wanted to see if the White House was going to be coming out with some kind of afternoon presser about how things were going with COVID. It was a daily thing. You constantly kept track of any kind of White House publications. Right now, it's not so much, and we're like getting into election season, and so our president is more public right now, and they're having those briefings that really seem like it's going to be something for us, and then it turns out, no, gas prices or strategic petroleum reserve releases and things like that. So it certainly is getting the president's schedule is a useful one. I used to know what it was when the link was different. Now I'm not quite sure if it was /economy and then president, but either way, it's in there. I usually just check the White House press briefings rather than use the bot, but that's because it's faster. Right. So, all right, let's get into it. The volume's a little lighter today than it was yesterday. Well, I say that, but looking at that number, 230. Yesterday was 208. So we're a little higher at 730 is where I had that line print. It's asking between midnight of last night and 7:30 this morning, how much volume have we had cumulatively in that space? And this morning's is elevated, higher than the last few days combined. And, on average, I guess is a way to say it. It's still not extreme. That's the only thing we use this for down at the bottom, is asking the question, is the volume, accumulated volume extreme? No, it is a little elevated, and that's fine. We just want to recognize it and kind of keep that in mind. If it was extreme, that would be important, or if it was really, really light, that would be important. You'll notice that on, say, the monthly job numbers day. It'll be really light until we get the job numbers, and then, of course, it explodes, it freaks out. I don't like giving up a lot of chart space. To me, this lower indicator is using up precious real estate, so once I take a look at it and I see what that accumulated value is, I turn it off. I don't need that anymore. Next, we want to focus on where are we? Are we still inside of yesterday's price action or not? It's a really great start to everything else that we want to do today. If we were inside of yesterday's price, then we would be focused on an inside day breakout. We've already broke out. We're to the downside. Thanks, Captain Obvious. So we get that figured out. Now we're down here. This red line is the ADR half. ADR is average daily range. And if we look way up here, I've got this nice little indicator telling us that the 21-day average movement is around 2.4%. Well, when we hear that, the first thing we got to think of is, okay, so from the Globex Open, we could move 2.4% in one direction, or we could move 1.2% this way and 1.2% this way, and that would be 2.4%. So we need to mark both lines. This red line is half of this ADR, which is why I call it the ADR half right there. We still need the ADR full. So if I scrunch this down and we kind of spread it out a little bit, now we've got the ADR half and the ADR full. So this yellow line is 2.4% away from the Globex Open. And this red line is half of that, 1.2% from the Globex open. We are below the ADR half, which generally speaking, when we get a candle close below that and multiple candles below that, we're very likely going to go ahead and continue that move. But that doesn't mean we have to, right? So let's get a couple levels, since there's a big wide space between where we are and where we want to go. I put that fib line on the open, but I think that was just more out of instinct than anything else. Let's take it up to the Globex high. So if we get rid of this box, the top of my fib line is at the highest Globex point, and the lower part of the fib line down here all right. So now we've got 37.10 and a half, 37.02, and I'm just going to see if we get a mid from that, 36.39, and then the ADR full at 36.87. And at that point, if we get that far today, we would want to reassess our pivot points and see what else we could find below the ADR full, right? We can't game it out from here other than to add one more pivot point. If things were to get extreme today, we could easily get another 50% more than our regular ADR. And so measuring the distance between the ADR half and the ADR full, and then plotting a line there, that'd be how we do that. Now, if there was a market maker move, we would want to add that as well. And we have a market maker move this morning. It is this bright pink or hot pink label saying that we have 0.75%, which is around 28.5 points. If you don't have this label, you can come into the trade tab. Thinkorswim will have a market maker move right there. I don't like how they do this. If there is no market maker move, nothing shows up there at all. I think they should redo it. And if there's no market maker move, then they should just not have the numbers, but it should still show MMM there. Unfortunately, that's not the way it works. If there's no market maker move, nothing will be there at all. Either way, $28.50 or 28.5 points. I used my label to give me percentages because I want percentages. It's 0.75%. If we take 2.4% and we add 0.77%, we get more than 3%. All right, and that's the takeaway. You don't have to get the old calculator out. I mean, you could, but you don't have to go that deep. It's a 3% move. How many times does the S&P move 3% in a day? Oh, it's done it. Make no mistake about that. It certainly has done it. But it doesn't happen very frequently in good markets, right? Bullish markets. It happens more in bearish markets because obviously volatility equals movement, and we get bigger moves in a volatile marketplace. So we got our lower level here. Before we use that, I want to put that 0.77 in. The easiest way to do that, give ourselves some downward space, draw the line, and as you'll notice, there's a little menu as I'm moving this, and we want that around 0.77. Doesn't have to be perfect, right? But so right there. That would be if we add the market maker move right there. Now, something that somebody had mentioned a while back is, well, if we only go half the ADR, shouldn't you put the market maker move up there instead of down here? And I gotta say, it was a really fair question. And I liked where the person was coming from with that thought. And since we had not had a market maker move since the person asked me that question, but we do have one now, I say let's do it and see if the market actually does respond in that area. I hadn't done that before because what I'm trying to find is how far could we go? Well, I've already got a level in orange that says we could go much farther than that. But I still say let's mark it anyways. So we basically took that market maker move and added it to the ADR half. I'm willing to do that, for a good 6 to 8 weeks and see if the market does react or respond around that level. That's how we learn, right? Let's try it. There is a possibility that we reclaim all of this lower price action and we get back inside of yesterday's range. And there's even a possibility that we break out of the top. Now, granted, it's not a very high probability, but it is a probability. We don't want to say, well, price can't do that. Oh, yeah, it can. It most certainly can. If we were to make that top side recovery, we would have to work through all of our pivot points. So first, getting back through the ADR half, crossing the VWAP, the low of yesterday, the cash open from yesterday, our own Globex high, the floor pivot. Right now we have not hit that floor pivot, which makes this a missed daily pivot, MDP. That's actually a trade strategy. Once we get through the cash open, we would need the RTH high of yesterday, and then all of yesterday's high. And along the way, we would hit 38.22, which is half the ADR to the upside, and we would hit the full ADR eventually if we kept going at 38.66. So we got a lot of pivot points that we could focus on to an upside move. Here we're looking at a 10-day, 30-minute volume profile and TPO. TPO is time, price, opportunity. Think of it as volume by time, and in green we got volume by price. Generally speaking, the point of controls should line up really well. And generally what I'm looking for is where we happen to have a significant amount of volume and yet we spent very, very little time there. That usually will imply that you landed in a liquidity pool, right? Like you hit a floor, you hit a ceiling. The point of control is over our head and we have a significant level of resistance around the 37.75 area. So if we can get through 37.75, it starts to get shallow all the way up to 38.75, which gets us into the point of control. Very unlikely that we're going to make that move today, but it is only 100 points away. The EAS can certainly make that distance, right? So it's on the table. It's doable. We just don't see it as a viable move today. So really watch that 37.77 area. It's a lot of resistance. Very likely going to struggle to get through that zone. Here we've got what we call mapping out the 555. This is where we carry forward these points of control from the previous day as long as they haven't been hit. So for an example up here, if we carried forward that point of control, price after that day closed, none of this has gone up and hit it. If we were carrying forward, say, that one, through the night everything was fine, then it came down and it knocked it out. Right? Simple enough. We call them untouched points of control. I've heard them called virgin points of control, VPOCs. Once they've been touched, you really don't need them anymore. You can take them off. We don't have one to add from yesterday because price in the Globex tagged it anyways, so there's nothing to carry forward. And there's really nothing that stands out here other than to show that our Globex high, that 37.80, 37.75, that is where that significant level of resistance is at that we were just looking at back here. Right? All of that. So if we do make that move to the upside today, it's very likely going to be very hard to get through. I'm about to delete this line. This is the virgin point of control from 726. So that's been on my chart since July. And look at what happened in the overnight hours. Now, sure, price did get through that level eventually, but first touch, point of control, from all the way back in July, price respected and responded to that level. That's why we carry them forward. Pretty cool, huh? Yeah, you like it. All right, that is a linear regression line that I just snapped, basically from the August high down to our current location. And one of the reasons that we want to look at this is, generally speaking, if you get, say, a 0.5% move on one side, you get a 0.5% move on the other side. Right? And usually everything is like reciprocated really well. Well, right now, this is what we're expecting to see reciprocated. That distance, that movement. So we're looking for the next swing low to end, and then a new swing high to begin, and likely put us somewhere around 39.5, maybe 3900, depending on how low we go before we begin to revert back up, right? Because price doesn't move in a straight line. We get that move down, and then the move up, and then the move down, and then the move up. Well, every one of those moves down and moves up are supposed to happen within a particular amount of distance. It's not perfect, right? But we're looking for the average, we're looking for the mean, and then we're looking for the distance swung to match that distance on the other side. I would say we're getting relatively close to ending this current swing low, and then we'll be looking for a swing up again. If we were to put one there for an example, from the June low to the August high, you can see that when on both of those two lines that I just drew, when you're working with less data, the outcome is not so valuable or so useful, right? But swing high, swing low, it will get shunted or blocked or stall. You know, there's times where it does not complete the move. So here we went to the downside. We did not reciprocate to the upside before getting another downside. We got stuck. Same thing here. We got stuck. So it's not always a perfect process. On the year, if we look at it from the bigger point of view, it's often easier to oh, I messed it up now, didn't I? It's often easier to look at it on a weekly. Just remember, this is going to count every single candle. So there's our Linreg line if we were using weeklies. The white line there, there's the low, there's the high, the low, blocked, New low, high. Now we're looking for that low. Always keep that in mind, right? That there is this mean that runs through price. And it's often why people say they don't want to short the whole, right? They don't want to go short from the bottom. Because usually, if you're thinking about it from that linear regression point of view, going short from the bottom would be at the bottom of that linear regression line where we're already expecting price to come back up first before it continues that move to the downside. Looking at the S&P here on the 4,500 tick, I can see my failed flag setup forming. Use the high of yesterday, the low of today, kind of gives us this base channel. Be looking for a breakout of that base channel, cross over the VWAP, challenge yesterday's low, and make a run towards the Globex Open. That's a fully formed trade strategy, not just me throwing it at you real quick there, but it's called the failed flag setup. There's a lot of metrics or criteria that go into it, but that's basically the gist of it. The markets are relatively in sync this morning. The S&P and the Nasdaq are both down around 1.25%. So we're not really getting, punishment from just tech or from finance, but kind of a balanced collection of negative markets. Volatility is picking up a little bit. Looks like we got an inside day breakout. It didn't stick, or at least it's looking like it might not stick. Got a little bit of a Busby there. We'll have to see how it plays out. VIX above 29 may begin to trigger some what they call VC fund activity, volatility control funds. There are funds out there that are strictly controlled by volatility. Their rules or their metrics to get in or get out of markets is based on a large part on what that volatility is going to do. And they don't get to choose. If the volatility hits a particular level, they have to get out. And if it hits a particular level, they have to get in. And when we know that, we can anticipate their forced buying or their forced selling. It's pretty nice to know when an institution is going to have to dump, a couple $1 billion. It'll be this slow, steady selling pressure or slow, steady buying pressure. 29 may begin to trigger those VC funds forced trading. It's not always a particular level. I don't have enough time in the morning to do a walkthrough to find out if 29 is going to be the level. If it isn't 29, then I'm very positive it's going to be 29.5. So if we get above 29 and the S&P has not broke its current low, then be watching that 29.5. Now I'm looking at the VIX futures. You don't have to, and it might not translate, but you could look at something like the VIX. This morning they happen to be pretty much in sync, but that's not always going to be the case. So for the VIX, I'd be using the same number. 29.5 feels a little more accurate. If we get above 30 in the VIX, I would expect to see the ES challenging our year-to-date 2022 lows. So, we're right on the edge of what would begin to trigger us into some pretty nasty stuff. So kind of keep that in mind. Plus, Goldman and Barclays got caught manipulating the VIX. I believe they're getting sued. That was an article that came out this week. Which means even if they are still manipulating it, they're going to have to do it a lot more gently than they have been because all eyes are on them, right? They have to be sneakier or more subtle than they have been. Kind of like a magician doing tricks, right? All right, the dollar above 112, which is just nuts. It's not done yet. It's not done yet by any sorts of the imagination. Stocks and bonds both moving to the downside together. So cats and dogs playing poker. Look for these two to decouple. Look for bonds and stocks to stop moving together. Bitcoin as well moved to the downside, but it's moved more than the S&P and the Nasdaq. We had that double top failure last night, failure to break out through the previous day's high, and then that was a wrap. Down it went. We are below the VWAP, but it's been a gentle move to the downside, so the VWAP has been able to keep pace relatively well. The cyan line there is the 4-period daily moving average, and we are now back below that. We briefly had broke above it. It didn't stick. So the VIX and the dollar right now kind of reflecting the same behavior, the same attitude. Look for that to decouple as well. The way that I see that happening would be the dollar breaking back down while the VIX not breaking back down, right? Kind of holding those levels and continuing up. I don't expect that, but if they were to separate, that would be the separation that I would expect to see. Sell off also in crude. Keep in mind, any kind of hurricane in the Gulf situation will likely spike crude back up. Energy overall, not looking at crude, is still a real solid short, as is anything liquid like, say, semiconductors or, yeah, kind of get the gist of it, right? Rather than listing everything that's a good short, you'd probably have a smaller list if you were to talk about what isn't a shortable trade right now. So we're basically going to be looking for the market to hold the line today. That's the base case argument, that we hold the line, that it doesn't get worse than 1.5% to the downside, and then we go into the weekend without any significant, horrible, deep dive downward. That's the plan, right? Now I'm coming back out to this chart for a moment to point out the weekly expected move. With all the lines and everything, it's sometimes easier to just use the box. That was our expected move for this week. And on Wednesday, we broke below it. Thursday, we kind of dipped back up, made it nearly half that body, which is a measurement we've talked about before. It came back up about half that body. Down we went, back out through the bottom of the expected move. And here we are today. If we were to do half of that, and plot it here, that lines up with that 3703 area. Not perfect, but pretty close, about a point away. Kind of shows that our technical analysis that we performed earlier is on track. It lines up with the same measurement using completely different data. So it's always great when our technical analysis aligns, especially when we get that data from different sources, and the answer is still the same. Another question we want to ask is, how's the volatility for next week looking? Is it less volatility than we had this week? More volatility? It's more. You got to think about that for a minute. They knew that this week was an FOMC week. You would have expected our expected move for the week that we were in to be a pretty good size expected move. They're saying that next week's is even bigger. Why? There's CPI is done, PPI is done, FOMC is done. What are they pricing in next week that we don't see? I don't have an answer, by the way. I mean, I'm literally asking the question. Why? I don't know. Definitely can point it out, though, and say it's there. Even if we don't know the why, next week is expected to be more volatile than this week was. So in the top up here, we're looking at the tick, and the kind of an orange thicker line is a 30-minute moving average on our 15-minute chart. I'm using that to kind of smooth out the data a little bit from the tick, and what we're looking for is divergence here. Our market, at least going into the close yesterday in the SPX, was kind of this sideways structure here. And yet, we had a really nice turnaround in the ticks. We started that bullish sentiment right around this time. So we do have a bullish divergence. We'll have to see how it plays out, but that has some nice implications to it. The thing is, a lot's happened in the overnight, and this does not count anything that happened in the overnight, right? The SPX is only open during the day. The ticks are only active during the day. So we have to see how the market's going to open today and then where it's going to go from there. But this is definitely bullish divergence. Got some energy names down over 2.5% this morning. Industrials, I mean, there's a few that stand out pretty bad, but not as many as we would expect. General Electric, Caterpillar, FedEx, the earnings though, right? UPS in sympathy. Ford down 3%. Screw Ford. Nike. Now, I heard yesterday a discussion about how Russia and China kind of, holding hands and giving pinky promises. Um, if that puts China back in kind of that negative social space, and we start looking at them to apply sanctions again, think about the EV markets and the internet tech names and kind of the big China names that we focus on that are going to take a beat down if we apply sanctions on China again, or more sanctions. And then the that threat of delisting. Remember, they just sent people over there to like start inspecting the delisting list. Could start to pick up a little bit. So think of JD, Alibaba, Baidu, Neo, and kind of go down the list, right? Chinese internet ETF is KWeb. It's just like what it sounds. But if you were to just go in and target, those specific names like Baidu, JD, Baba, a lot of those EV names as well. Financials are not looking really hot this morning. Citigroup, Wells Fargo, JP Morgan, they're all down more than 1.5% or more. Right now we're looking at a pretty high correlation coefficient. We have almost nothing in the S&P positive. Eli Lilly is barely up 0.25% this morning. We got a couple of names that really haven't printed anything. A couple of healthcare and utilities names, but otherwise everything is down. The most extreme is Ford in the S&P 100. And in the NASDAQ, it's not much of a surprise that information technology is leading. Staples isn't too far behind. Costco had that earnings, right? Bum, bum, bum. Yeah. So earnings on Costco. Chips continue to take the beat down. AMD this morning is a great example of that, down nearly 2.25. So one of the things you want to do on a day like this when everything is down so much is we're trying to discern, are we going to continue this bias through the day, or are we going to kind of stabilize after opening, right? Opening down, and we're just going to keep it for the rest of the day, or is everything going to flip over and we're going to buoy back up? We're looking here at the NASDAQ. The filter is how many names in the NASDAQ are down at least 0.5%. 75. Man, that's bearish. That's a good, strong, solid, bearish market this morning. It's not fickle or fleeting. It is broad-based across the board, digging into all the nooks and crannies. Just a good, solid, bearish market this morning. Did we need to bring it in and look at it to see its 73 names? No. No, but when you're trying to quantify, like, how bad is it out there? 60% of the NASDAQ is down more than 1% this morning. That's how bad it is out there. That is solidly bearish. And what this implies is you should not be looking for a move up. Right? When we ask that question, have we gone far enough to the downside that we should start popping up? Probably, but not yet. Remember, we need, on any move down, capitulation to move up, right? That knee-jerk response. Now, we're not talking about, rallying back to August. We're just talking about maybe rallying up on the week to get above the weekly expected move low, for an example. The S&P. In the S&P 100, we've got 89 names that are down at least 0.5%. That's 89% of the S&P 100 is down this morning. 0.5%. 63% of the S&P is down this morning, more than 1%. That is solidly bearish. So we don't have to try to pick and choose which name is bearish. They should all be bearish. High correlation coefficient. You may start to see energy turn around, right? Or say pot stocks or crypto, right? Look for something to break away that doesn't necessarily have a positive beta. But that would be like the few and far between for any kind of long opportunities. Now, when we are gapped down like this, we're going to expect to see green candles at the open, not because we're bearish and we think it's going to flip over and go back up, but because when a market is gapped down, it instinctively wants to try to close that gap. So when you see those green candles coming in at the open, it could be that we're rallying back up. It could, but it very likely is just a move to the upside to try to close the gap. Now, for all you newer traders who say, well, I don't see a gap, it's a continuous set of candles all the way down. Yeah, but we're talking about the difference between where we closed and where we open and not looking at the overnight hours, right? So when I turn off the Globex, this is where we closed yesterday. And that's what we're going to be aiming for. Obviously, it's so far away that the gap close, the impulsive move to close the gap is very likely not going to be able to reach all the way up there and close it. But that's what very likely the market's going to try to do at the open, is attempt to close that gap. If we continue the move to the downside, today will be what I call a trend day. It's one of my 4 very specific, very unique kind of days. You can get trend anywhere. A trend day has unique characteristics to it. One of those characteristics is that we don't close this gap. We don't even try to close the gap. Another characteristic is that we will not be inside of our own Globex price action. So once the market opens and we break below our current Globex low, we're in open territory, nothing to the left. That will be where we have the potential for a trend day. be one of the criteria, right? Kind of like back here for an example, except it was the wrong time of day. When we finally escaped our own Globex and made that move. But again, it was too late in the day for that. A trend day has two aspects, a morning or an afternoon. So, we can move in one direction all morning and then look for that afternoon reversal. That'd be another one called a rounded reversal. Or we can base and hold the line through the morning and then get that afternoon trend. If we move up from these lows towards this yellow line, even if it's a very beautiful, sexy, amazing trend on its way back up, it would not be one of my 4 trend days. It doesn't meet the qualifications or the criteria when we can look left and see that we are traveling through price action. In this move down, we're going to be focused on one last saving spot. We're there now, 37.23. And then below that, 36.39 is the level that we really need to hold. And we're talking about the technical analysis criteria here, right? When we're talking about lower highs, lower lows, where's the next pivot, that kind of language. Right now, we're still above this level. So while this one kind of threw everybody off because it gave us a higher low, higher than this, or not a higher low, but a higher high, because it was higher than this high, and that kind of threw off the technical analysis because it's supposed to be high, lower high, lower high, lower high, lower high, right? That's trend. So when we broke that level and we set a higher high than that previous high, it kind of screwed up all the technicals. And we're looking for that to be resolved. So when we came along right in here and it looked like we were going to set a higher low, that was going to be the start of higher low, higher high, higher low, higher high, right? And a trend back up. Obviously, all that went to hell when August failed and we started to fall back down again. When it comes to marking the pivot and calling that a higher low, we actually needed the pivot to form and price to come up enough that we can say that it is a pivot, so that we can then say it is a higher low. I think the argument can be made that we didn't get enough of a reciprocated move to even have this considered as a pivot. The reason it's important then is because then you've got your lower low, lower low, lower low, and we will still be looking for our new lower low to continue this whole thing as a trend to the downside. Now that I put that linear regression line back on there, what I'm talking about probably makes more sense. Just keep in mind with these pivot points, liquidity rests on the other side of the pivot. So when price gets to that level, we expect it to go through that level and onto the other side to land in that liquidity. It should not stop on a dime at that tick at that spot perfectly. If it does, it should make you nervous. On the week, if we break and close below 36.39, we're very likely going to be heading down to the next level, the next leg. And, And we've used enough time for today. We'll get into that technical analysis on another day. Everybody enjoy your weekend. Be careful, be safe. I'll see you all next week.